Okay. Whoa. Okay. Hey guys, how you guys doing? This is Greg McLeod from the Elite Traders University and the Forex Cash Machine and my market heat map. And it's good to be with you here for our Bulls versus Bears. That's going to be our weekly. Uh, let's get it up there, right? And let's go ahead and hide this. Okay. Okay. I'm going to do display and ATO. And let's get the title screen. There we go. So welcome. My name is Greg McLeod. We're going to get started in just a few minutes. Make sure you can hear my voice and see my screen. And we should probably go here and go here. 8 Bulls versus Bears for the week of February 8th, 2022. My name is Greg McLeod. It's so good to be with you on this Saturday evening. And I wish you well. You're staying warm, safe, and healthy on this Saturday. And I'm going to give you my market forecast for this week. Boy, have we had a fantastic trading week last week. We had a number of central bank announcements. We had the Bank of England, the ECB, and we also saw the Reserve Bank of Australia, and their rate announcements caused their currencies to rally. And we also had some earnings announcements out of some big names like Facebook and Google, both going in opposite directions. So we're going to talk about what's moving in the currency markets and for this coming week, and we might take a little bit of a look at crypto as well. But let's go ahead and get started with what's going on. Okay, let me go ahead and we're going to turn this off, right? All right, we're going to start with my market heat map as arrangement of currency pairs by percentage change. And we're going to go ahead and get to that right now. I know my heat map is a little on the map. There we go. There we go. All right. Order on top. Okay. So we're going to take a look at what's going on in the markets, and it's one of my favorite tools because it's not just the heat map. During the weekend, there's nothing really happening, right? But we have a number of tools here, and one of the tools I like looking at is the economic calendar. There's lots of tools here, charts, quotes, Forex heat maps, sentiment analysis, all the tools in the tool chest that you need. You can try it free for 30 days, or you can, and then after that, it's just not $19.97 a month. And it's a great service. We've just added Forex TV, which is pretty good as well. So let's go ahead and go to the economic calendar and the economic calendar for this week. And we're going to look at the high impact items. I like getting rid of those other, the lower impact items. And then we're going to look at, this was stuff that happened last week. So we're going to look at this week's a new week. And we have a very light economic calendar. And I've never seen it this light. Where basically we've only got Thursday and Friday for news. And what that really means is that the other currencies are going to be trading probably within technical ranges, and they're probably not going to trend. So it's actually a good time to scalp the market if you have a good scalping strategy to go in and out of the market, because you don't have major news that's basically acting like a black hole that pulls price in one direction or another. So but we do have some things Thursday and Friday, both with the US dollar and the British pound, the US economy. Thursday, February 10th, we have Consumer Price Index, month on month. It's not MOM, but month on month. That's going to be released at 8:30 a.m. Eastern Time on Thursday, February 10th, 2022. And we're going to look at, when you see Consumer Price Index, it's really an inflation measure. That I says index, but it actually stands for inflation, because they're going to look at prices compared, this month's price or last month's prices, January, or actually December compared to January, because February hasn't finished yet. So it's backward looking. Previous number was 0.5%. Forecast called to a fall of 0.4%. I really wouldn't put much in a stock in these forecasts, because they're usually wrong, as we saw with non-farm payroll. Non-farm payroll, we had previous number was 199,000 jobs created. They forecasted 110,000 jobs created. And actually, we have a blockbuster number of 469,000 jobs created. Now, where did they just lose 300,000 jobs, right? They just like, oops, we miscounted. Sorry about that. So it could be a little funny stuff, some manipulation or something like that they were that off, like the 360,000 jobs off, right? So I wouldn't put much, analysis in the forecast. So, if this comes at this level, it's going to go up, or this level, the euro or the dollar are going to go down. What I just want to look at is where is the action going to be on that day and that time, or maybe a few hours, or maybe even a couple of days leading up into that. Because you have big banks that are moving millions of dollars in currency, billions, a yard is a billion notional of currency. And when you have a big ship like that in the harbor, you don't turn it on a dime. It takes a little bit of time to maneuver, to take positions, and to accumulate or distribute. So that's where we look at maybe a couple of days ahead and start looking at what direction they're going to move this the currency, right? Typically, when I trade U.S. news, I like trading the euro. It's one of the most liquid and most widely traded financial instruments in the planet, on the universe. The euros makes up 85% of Forex volume. And, I don't like getting slipped. I don't like wide spreads. I don't like high commissions. The more people that are trading a particular financial instrument, the tighter the spreads, the lower the cost, which means, more profit in your pocket when you're right? So, and also the euro is considered the anti-dollar. And so, in fact, it was a counterbalance. It was the European currency unit back in the 70s, and it didn't really become able to be traded until 1999. I remember when they came to market to be traded against the US dollar. So, the euro will probably be most impacted by this type of news, high impact news. We have a steep drop after non-farm payroll that came out so strong. The US dollar actually benefited from good news. And typically, when we have good US economic news, the dollar usually sells off. So this could be a false flag or something weird going on there too, right? So we might see some type of rebound in the euro. We'll take a look at the charts right after we talk about the technical. So if you're kind of like, economics, blah, 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 I don't want to hear it, I don't understand it. It's really simple. I look at the flags, and then if it's a US flag, I'm going to trade the euro. Any other currency pair, like the British pound, I'm going to trade the British pound and the pound pairs, but preferably the pound dollar or maybe the pound yen or something like that. In fact, that's what are coming up the next day, Friday, February 11th, 2022. We're going to look at manufacturing production month on month in the UK. The previous number was 1.1. No forecast is given. They really shouldn't give a forecast because they get these forecasts wrong, right? So all this is telling me is that there's going to be a lot of action on the pound at 2 a.m. Eastern time. So I'm going to be watching the pound. In fact, probably 24 hours ahead of time, those big banks are going to be positioning themselves ahead of time for this announcement. The banks don't like losing. They rarely lose. So I want to follow the big dogs, and you should too. But again, that's just my opinion. This is my 2 pips worth, right? So real simple for our trading plan for coming up for this week. I'm just going to be looking at the euro. I'm going to be looking at the pound versus US dollar, the euro versus US dollar. Those are my 2 currencies I have on my chart, on my map, because that's what's happening here, right? Now, there may be some things going on range-wise on other currencies, but the volume is going to be driven by U.S. Consumer Price Index, because really this is going to lead into whether Jerome Powell, the Fed, the Central Bank of the United States, are they going to have to raise interest rates? Okay, because Jerome Powell has said he's the head of our U.S. Central Bank, And he says that he had said that the inflation was transitory, that was temporary. Supply chain, as the supply chain starts to work its way out, the prices should fall. Now, if prices do fall, as Jerome Powell had said, many people have said the Fed is behind the curve, meaning they should have raised rates a long time ago. That's why prices are so high. I tell you what, if they were to raise rates significantly, we would probably see a crash in our housing market, a crash in the U.S. stock market, because a lot of these companies are leveraged to the hilt, borrowing money at low interest rates or paying debt, and now they cannot borrow cheaply. So high interest rates, our economy is kind of based on cheap money right now, and so I would expect these numbers maybe to come in a little lower. Um, Whether they are lower or not, and you probably know they're not lower. You go to the supermarket and look at what it costs for maybe a gallon of milk or some eggs, or maybe a little cheap steak or something, or maybe some fruit, a basket of fruit, of strawberries or something. And you notice that the prices they're cray-cray, they're off the chain. But these numbers are controlled by people, and if they can show these numbers are lower, then they won't have to raise interest rates, right? So that is the game that they may want to play. And if they don't raise rates, then we could probably see a drop in the dollar, a rise in the euro, a rise in the pound, right? But let's go ahead and move to the technicals, okay? So enough of the postulating there. And so I'm going to go to TradingView. And what we're going to do is we're going to take a look at this is going to be a real short segment here. I'm just going to go to the euro. And we go EURUSD, and I'm probably going to pick, let's launch Pepperstone, right? And I am going to clean up my charts, and this is a monthly chart of the euro. And it's very interesting to see because, we were a high of about 149 back in 2012. And we've been making lower swing highs and lower swing lows in this kind of a downtrend. And we actually broke the downtrend line, tapped it, broke below it, and now we're testing it from the backside. But once trend lines are broken, we kind of like redrawing them again on top of the last major swing high. And so that's what we're drawing here is this big move. Now, and you may see a pattern here. One of the patterns that's pretty common is this inverted head and shoulders here, right? And we can actually, again, this is a monthly chart, and we have a left shoulder, a head, looks like a Quasimodo or something, Hunchback of Notre Dame or something. There you go. There's your shoulder there, and maybe some type of a double shoulder, something there, right? So we've got some type of where price has this inverted head and shoulder. And now we've got right here at the end a steep downtrend. But that downtrend line has been broken, right? We just peaked above it. And this is a monthly chart. So we've got some really nice support. When you have a bottom, one spot 1100 was our whole number, round number bounce. And we had several bounces in this area here, this 10589, where we hit that repeatedly in 2015, in 2016, and again in 2020. And now we're making a higher low. This was our low. Now we have a higher low, which is showing a nascent uptrend of 2 points. 2 points make a line. That's, geometry 101, right? So this is basic technical analysis. If you guys want to learn technical analysis, then, that's where you want to come to the Elite Traders University. And let me take care of the date line. That date was hanging around, right? So we've got this this line here. I'm going to make this green because that's my demand line. When price hit this line, we have 2 points. We really don't have a line until we get a third point on the line, which will be the test of this line, right? But in the meantime, price, we have a nice little kind of morning star, kind of pseudo-morning, shades of gray morning star, where price is breaking here. This is a monthly chart. We had all kinds of resistance over here. Again, at the maybe the one spot 2353 area, and we could maybe push up a little bit, and we hit maybe the one right in there. But this is like a double, almost a double top right there. Right. So we got a trend line break, a new trend line coming about, a higher low, and so this from a monthly point of view looks like it could go higher, right? And then also we have this head and shoulders that may be in play, and we drew a neckline. Our neckline was somewhere in here, and if this comes out to be now this we're out. This is a 50,000 foot view, right? We're out there out in outer space looking down at this currency pair from a monthly time frame. I kind of like dust the monthly off, right? So we had that break that didn't work, and then we have this one that didn't work, and we could probably even say that maybe this is our shoulder. If we can take our shoulder up, maybe we go up here, right? So we have something like that. But I think maybe this kind of like some type of compound shoulder. Well, then, if we take the height from the neckline to the top of the head, and then we project it from a breakout line, and our neckline would be here, right? We connect these as our neckline. Or we can connect that as our neckline, which is right there, right? Well, then if that's our neckline, then this is a little bit taller, right? Let me just clone this one to get rid of this one, right? Because that's going to... And we have some really interesting things that may develop. Really some interesting targets, right? Now, this is very interesting targets. Where we can see 154.48 on that, right? Now, if this breaks down, we have multiple bottoms here. We need to break 105. We head back to parity probably. But what's going on is you have this big thing kind of turning massively on the monthly. I spent enough time with. Let's go to the daily. Okay, so here's our daily chart, and you can see non-farm payroll came out. We had a spike up, and then a very sharp move down on the daily. But then right here. Actually, the non-farm payroll daily was like in here, right? So we were already in motion for a move higher. Many of you guys have already. If you've taken the boot camp or the Pip and Run mentorship, you probably see all kinds of things going on here. You're probably you're licking your chops. What's going on? I'm going to even scale into a 4-hour chart. These are called dealer charts. Many dealers use the 4-hour charts to identify trading opportunities. Now, after such a big move, we might get some type of pullback, retest. We broke the trend line. This is a big monthly trend line we broke. And sometimes price, what it does is once it breaks out to a new area, I call it RTTSC, or return to the scene of the crime, where price comes up here and says, I don't know about this. It'll come back down and actually retest the breakout point, right? Retest the breakout point. So, that could be sizable, down to 113.77, right? Now, if it tests this area and it holds, maybe move sideways for a bit. It may move sideways along the line, get used to being out in the outs, and then it may start moving on its merry way, right? So we might see maybe some type of dollar strength, and maybe the euro pulls back a little bit, and then makes a move up into this space that we have. Lots of space. Once we broke a significant high, 114.85, big breakout point above that. That's an old high, and that's a double top. So price came back down, rejection. But I tell you what, we break that pink line, then we're back in business, 116.16, and all these big long bars get filled. Because really in Forex, they say there's no gaps, because these charts are indicative of price. They don't really say exactly who the buyers are or what they bought or whatever. They just indicate where price is. It could be a guy at the airport. It could be some guy, on a credit card. That notional volume of the Forex market covers a lot of things, not just trades. So now you've got these big, wide-ranging bars that are just basically looking to be filled, gap fillers. And so that would be something there. I hope you find this helpful. If you like it, type something in the chat box and let me know if you can, if you can see what's going on. We drop this down even further down to a 1-hour chart, and you can see that we're kind of like in this topping action rejection, right? Maybe an ABC pullback, and maybe even might even pull back deeper to fill this in, because this is a very big sharp move we had, right? So we may come back even here. So bulls versus bears. I'm actually I'm short term or medium term bearish, right? And so I'm just thinking that as long as we hold below 114.85, we're going to see some type of bear move. And okay. However, we get down to that 113.03 area or so, then I looked at maybe a rebound from there to new highs, right? So that's the euro. Okay. I actually want to look at the dollar index, the DXY, the Dixie they call it, and we can start off even from our 50,000 foot view. I can start from the monthly, and we can start from this much higher move here, and we can see that like the euro, it's had kind of a downtrend. It also had an uptrend too. When you have a downtrend and an uptrend both meeting, you form a triangle. In the triangle is like having a question mark at the end of a sentence. Would you like more water? Question mark. Do you want to go higher? Question mark. The triangle is a question mark. And then, yes, I would like more water. A break above the supply line. Or, no, I don't want more water. A break below this demand line here, right? So right now we're in the middle of this range here. And but we look at where we came from, we came from even much higher. We took that and extended it. And I was not going to touch it, but, this goes back to 1986, right? So we have actually another, I don't know if that was a high or not, but we do have a trend line there that would take us back up to maybe 107. But we're making a double top, lower high, double bottom, lots of indecision there, and it's all because of, what's going on with interest rates. So that's the monthly, but let's go down to daily to give us some more clarity. And here we go. We've got we had this nice double bottom, a rise up to a high of 97.46, and now we came down, but now we have like this harami pattern. A harami pattern is a bullish reversal candlestick pattern. Harami means skin on the belly, or pregnant pattern, where you have a mommy candlestick, then you have a small-bodied, a spinning top. This is the baby in the front, right? Well, this is a bullish pattern. Even though the green candle is small, the red candle is big. But that basically means that baby's coming out, and it could grow up to be a big green candle, right? That's what happens to babies that are born. They get bigger, right? And then also we have a rising trend line, a demand line, higher highs and higher lows. And this is the third test of a line created by 2 points, right? And actually, it's like multiple tests. It's not quite. It's almost a test. If we cheat it like that, then it's actually like a 4 test. But we're basically testing a trend line that went back to September, right? And we were sideways. We went sideways, and then we started to take off, right? So here we have a bullish candlestick pattern in an uptrend. I'm going to change this to green. because that's my demand line. Green. Our supply line, the sell line, is the downtrend line here. Make that red. Right. And this downtrend is still in effect until this trend line, the price goes through this trend line. And the way we teach it in our course is that when price breaks the line, we pull the trigger on it. Okay, it comes right in our sights. We got a sight, we got a target right there. When it crosses in, one candle close, we're in, and then we look for price to move higher. Okay, because we've got a backstop of support here, right? Our stop would be somewhere below here, and the way the trade would look something like this, right? Now this is a daily chart, so no, I wouldn't necessarily place a trade on this wide a time frame, because now right. So basically, what this is saying is, well, Greg, we don't even trade the dollar. What are you talking about? Well, you do. If you trade Aussie dollar, Euro dollar, Pound dollar, they have the dollar in it. So if this currency is going up, that would mean that all the ones I mentioned are going to go down because they have the USD in the back. DXY and USD mean the same thing. Okay. So let's drop. We're in a daily time frame. So, well, Greg, that's kind of far away. Can we go down into micro world and see what's going on? So we're going to go into 4-hour charts, and there we go. We have a move, bullish candle off the trend line, but we have not broken it. So we'd see maybe a break of 95.78, and that would tie in with the euro pulling back a little bit, as this is basically the euro turned upside down. If we went back to the euro, it would look similar, where the euro was coming down and this one is turning up. We can drill down some more. We're going down into time frames, going into those. There's 4 1-hour candles in one of these bars, so we're going to go into a 1-hour candle, zoom on in, dive on in, and we can see that the pressure is building. We had some lows. The bears have basically run out of energy. They're out of momentum. Buyers are stepping in. Bears trying to launch an attack. This is an epic battle, guys, between bulls and bears. That's why I have the heat map back there, green versus red. And we've got the neutral stuff in the middle. But, when the green is taking control, that's going to be higher up on the heat map. And when the red's in control, it's going to be lower on the heat map, right? So we're sitting across here on this trend line, looking for a possible break and a possible fill of this drop, 96.11, which would tie into a drop in the euro and a drop in the pound, okay? So, and we can even go, half of that's 30 minutes. Look at a 30-minute chart, and you can see maybe some type of couple handle formation or something forming like that. But on bulls versus bears, I am bullish on the U.S. dollar for now. Okay. So let's go ahead and look at the next currency, which we're going to look at is the pound. Again, there's some news coming out, and we're going to take a look at that. So here's the British pound. Oh, let me hide my bull. Okay. Here's the British pound, and we'll again do the same kind of thing. Start off with a higher time frame. If you can start a higher time frame and start working your way down, well, then you're going to be in a very good place, because now you have a perspective, you have an operating framework of how currencies actually function, how they actually move. And with the banks, you're looking with bankers' eyes, okay? So we got, first of all, a downward trend line, supply line. We broke that. We broke it back in November 2020. There is a new one, right here. So we got a guy sniper on the hill, and we need to break. That's break here. We also have a very common pattern called the double bottom, and we see that price is wicked in this one spot, 1600, whole number round number area. Buyers stepped in with a vengeance, pushed it up, but met with sellers on the top side for a double top. So you have a double bottom and a double top. Who wins? Epic battle between the bulls and the bears, right? this is what we call a range. We're in a big range. A range from 116.00 to 114.32. 14329, and so it's roughly what the 32 no 2600 pip channel, right? So just bouncing around, hits the top of that, and it drops to the bottom here, rises up. And if you took a trade somewhere in here, you're a genius and you made a ton of money, right? In fact, how much would you have made, right, from here to here? Well, that's 2,783 pips, right? So $10 a pip or $1 a pip. $1 a pip, you made $2,800. Okay, took you a year, but it's more than you would get in the bank if you just left it there, right? All right. So this is our monthly chart, and then so we have a trend line. We have a supply line right here. Actually, we have a demand line, right? We can, and this is an outside wicks. I would lose that. And I go, okay, we've got this trend line here. Make that green, because when this line gets hit, usually price goes up. So we're trading near support on a monthly chart. But let's drill down a little bit farther. We have a downward trend line. Again, we have a downtrend and an uptrend. That's a question mark. Do I want more water or I don't want more water? Or do I want more bread or do I don't? It's a question, right? Because buyers are pushing prices up, sellers are pushing prices down. The resolution would give us some type of a breakout, a tradable breakout that can be very, very rewarding if you're on the right side of the trade. Okay, so let's go ahead and drill down to a daily chart, and let's take a look at what's going on. Right, daily chart, nice rally from a goodly bit of support. We can draw another demand trend line here, right? And we basically have 2 points, 1, 2. The third point determines a line. So this, it looks like it's coming back down toward this. I got to test this line, right? But this was, each bar is 1 day. So 1, 2, 3, 4, 5 days of unrelenting bullish sentiment. But then non-farm payroll came out, and we had this is an evening star, 3-candle pattern called an evening star pattern. It's one of the reversal candlestick patterns, reversal patterns, right? And it's like that, right? Here's our reversal pattern right there. So 3-candle reversal, and this is our evening star. Before we have a morning star, and we look for a continuation, maybe down, right, on the daily chart. I mean, and usually these things happen in the Fibonacci area. So if you took a fib, play that Drake song backwards from the top to the bottom, and now we're here. And you can see that we bounced right at the 61.8 Fibonacci resistance area. A great area to take a short at 36.01, and you would have been up about 86 pips, which would have been really nice. We actually had some students that took that trade and did rather well. Okay, but if you can hold it that long, I've probably scalped 10, 15 pips with 10 standard lots and been done with it. But we have students that like holding things a little bit longer. They work a job, and so it works out for them, when they can hold it longer and not watch the screen. They have family and little kids and 2 jobs maybe, and so if they're busy professionals and running a business, and they can't be a screen jockey like me. But, I spend about 2 hours in front of the computer, and that's about it. Okay, let's go down. We'll drill down from a daily chart to our dealer charts. Remember, dealer charts are 4-hour charts. The dealers are the people who run the machinery in the brokerage in these firms around the world, the operators, and they drive price where they see fit, okay, or where they're told to take it, right? And basically, they're almost like shepherds guiding the flock. So by pushing prices and wicking and creating different types of scenarios, they can move prices and adjust the balance of supply and demand, right? And I worked with them, so it's interesting what they do, right? someone comes over to your computer and says, "Oh, we're going to take dollar yen north." It's like, oh, okay, well, I think I'll buy a dollar yen. Just um, like Gordon Gekko says, if you're not inside, you're outside. And I was fortunate enough to be on the inside and learned quite a bit on the inside and learned a lot of great colleagues I worked with as well. And very grateful for the experiences I obtained working at FXCM. So I can share it with my tribe and help them to trade better and smarter. All right, so we have higher highs and higher lows and a pullback to support. And now we have this kind of, he's like, okay, Greg, we've tested the trend line. Yeah, it's a weird kind of test because we had this harami bullish candlestick pattern, mommy with the baby in the front. But it looks like this baby is not growing up too well. I think he's becoming a little bit rebellious. He's he turned into a doji indecision. When you see a cross, it means indecision. Okay, and in real life, the cross is a decision process too. It's like if you believe in the cross, then you have salvation, and if you don't, you say I don't believe in this silly stuff, and basically you have no salvation, and you go where you think you're gonna go. I mean, you may think, oh, there's nothing there, but anyway, I digress. This is a cross, and the price has to make a decision where it wants to go. Wants it to go up to heaven, or wants to go to hell? Where does it want to go? Well, there's indecision here. When you see a cross or what we call a doji, it means indecision. It means the market has not made up its mind. However, I have a doji strategy because this lowly doji, which looks like it means nothing. A break above this doji high, 35.47, could lead to a retest of this trend line, right? That's, I have some buy stops, some triggers to go there, but then if it breaks the low of that doji, then it might be a good shorting opportunity as well, right? So that doji is, in fact, it's a range. It's if you go inside of it, inside of that cross, what we're going to drop to 1 hour, it'll turn into 4 different candles. And you can see those 4 candles have made up that doji, and we really haven't gone anywhere, right? There's no decision made. And we could drop even half that to 30. Now we've doubled the amount of candles, and look, it's still a range because it's that doji that we went inside. We went inside that doji, that 4-hour doji, and then we go inside that even farther down to a 15, and it's just one big long range, right? So what you got, a breakout channel basically. So doji on a 4-hour time frame is a range and a rectangle pattern. And so there is no real edge here. Probably waiting for news. It's tradable opportunities. If you get down to like a 5-minute or 1 minute, it's like Pong. And I'm dating myself to an old video game called Pong, where you got 2 little paddles and you bounce this little dot back and forth. And this is just Pong or tennis, right? Just back and forth. Ding, they just bound. Bing, up, ding, down, and up. Right? So we're in a range. We're in a trendless environment, right? Especially after a big drop like that. I remember when I was in gym in junior high school, and we would have to run. And there's guys that can run and run and run. I was a runner and a walker. I ran for a little bit, I got tired, and I walked, right? So consequently, I probably got, get the B in gym. I didn't get the A because I wasn't a non-stop runner. And so the Forex market, it's like that too. It runs, and then it walks a little bit. Then it runs, and then it walks a little bit. And you might hear the technical term of it. They'll say, we go from high volatility to low volatility. The spring is either open, or then it closes down, right? Like a spring. You press the spring down, low volatility, boom, it explodes. So low volatility or price compression precedes high volatility, right? So we get a little compression, we break, little compression, break. The longer the compression, the bigger the break. So we had just a little bit of compression for a big break for non-farm payroll. So we might see some type of break. I mean, we can even draw more of a higher trend line here, higher highs and higher lows. And again, this is a triangle on a 1-minute chart, and it hasn't. It looks like it resolved up for a breakout. It may come back up to this area and double top. So right now, the indecision, and then probably, again, this is more of a trading range, and really it's telling you something. If these pairs which have news aren't really doing anything, and I believe extended. We've had some extended Asian holiday. The Lunar New Year, the Year of the Tiger, and so volumes are probably a little bit lower than they would ordinarily be. A lot of this stuff is just moving in these sideways consolidations, right? But non-farm payroll gave us our kind of move, our decision move. So it'll be very interesting to see what's going on here, right? So let's take a look at Bitcoin, BTC. It broke out, and then I'll let you guys go. And let this be something. Oh, okay. Yeah. Well, there's a trend line. Nice break. Yeah, on that. Yeah. And we hit the level of support, old levels of that. That was our just heavy demand right there. I mean, price came down and shot it up. Price came right down there again. We went from July 20th to January 24th, right? And we just hit this, and then we broke the supply line. We have a new demand line. Way far away from the demand line, too, and so we might come back to retest. I mean, we have 2 points. We only have a third point on the line, so we may come down to the line. We're at 41,535, topping, and lots of congestion right in here, in that 4,400 area, 4,300 area, right in there. See that little block right there? We see a block of congestion. Just bring it on over, because that's what it's running into, right? So I may come back and grab some more guys to be able to bust through that and go higher, because this is a nice gap down. So we could probably come back to 45.82, right? And an easy way to kind of see what the typical target this might be is to take a fib. Take a fib from the bottom to the top, stick a fib on it. 38% retracement, 46,710. And there's a ton of congestion in this area. If we take that congestion zone to here, this congestion zone is a little bit tougher than this one, because it spanned a longer period of time. So, and also at a 38% Fibonacci retracement, 46,710. So that's about $800 away. 700 and something, some change away. They could probably see some real resistance here. This thing stopped right at the 23% retracement, 41,376. Just hit there, smack on, boom, stop, right? So it might take a little bit of a break, and then the next stop, I would look at buying dips. So bulls versus bears, I'm constructively bullish on Bitcoin. And we'll give it a full, okay. All right, guys, that's going to be it for me, and I want to thank you for being my great audience. Remember, check out the free masterclass, 4 Pillars to 6 Figures, if you want to learn more about what how to be a better trader, a more successful trader. And also, if you like some of the tools I use, feel free to take advantage of the 30-day trial of my market heat map. An arrangement of currency pairs by percentage change. Just a 30-day free trial. You can use it on your iPhone or your Android-enabled device, and that be something that you can use. There's lots of tools. In fact, you can look. There's 6 heat maps right now. The market's closed, but the Forex Majors heat map is free on the website. So make sure you bookmark my market heat map and check it before you trade when the market is open. And you can see these. You can actually see it in action, right? So there are 6 heat maps. This is just one of those heat maps, the Forex majors. I think it's very useful. I think it's very helpful to be able to check this before you take a trade. Okay, and you can also find out more. There's a video, instructional video there as well, and we have these interactive heat maps. There's also a trader toolbox with Forex TV, economic news, sentiment analysis, Forex liquidity, a number of other tools. In fact, you probably can't see anything because I got the bull still there. Other services in their trader toolbox and education. There's also a wonderful 81 course, Forex Foundations course. If you're brand new to trading and you don't know how to trade, or you don't know how to get started, this is a great way. 30 days free, you can try it, and then once you go through the course, I'm sure you'll be wanting to make this part of your trading regime, part of your tools, part of something that you look at. So, and a lot of people have, there's $9,700 worth of bonuses there, and a lot of people have benefited from using our the My Market heat map. Okay, so with that, I want to thank you so much for being part of our group today. If you have any questions, you can email me at greg@elitetradersu.com. I look forward to servicing you and helping you achieve your trading goals. This is Greg McLeod signing out from the EliteTradersUniversity.com. Cheers. Bye-bye.